The emerging risks of environmental insurance is keeping underwriters on their toes. I'm John Weber for Best Review Magazine. I'm speaking today to Jon Peeples. Jon is Vice President of Environmental for PHLY Insurance. Jon, thank you so much for taking the time to speak with us today.
Thank you, John. It's great to be here.
And Jon, can you talk to us about what some of those emerging risks are?
Sure. We're tracking a couple of things right now that are prevalent. One is called ETO. It's ethylene oxide. It's actually a gas that's used for sterilizing medical equipment. The concern with it is unregulated, and it's been found by the EPA as carcinogenic. I think that was back in 2016. The issue with it is it's colorless, it's odorless, and it's getting into air emissions. And so if you breathe it in over a long-term exposure, you can get cancers. The concern we have right now with it not being regulated is that the EPA will go through a process where they will set regulations. There's only 2 facilities in America that manufacture this gas. Both are being studied for cancer risks of the surrounding population for air emissions. That is a controllable concern. What is a concern to us as an underwriter is that we write a lot of medical institutions that are using this type of equipment to sterilize their medical equipment. And so the concern that we have is if it does get regulated, how does that impact third parties in hospitals for any type of air emissions, as well as possibly the workers. So we're monitoring that situation as it's somewhat fluid.
What is it that insurance agents should know about these risks?
Well, right now, the big concern for them is if they do have operations that have medical offices, medical emergency rooms, hospitals and such, there should be some concerns about indoor air quality. It may not be just an environmental issue, but a workers' compensation issue, since it does cause cancer. So they should be on the lookout for that. That means OSHA, the Occupational Safety and Hazard Administration, will be involved, as well as the EPA. And from an environmental standpoint, it may impact as it relates to the agents that are working on the 2 facilities. We know right now that both facilities that manufacture this gas have pollution legal liability policies. And so considering that we may be seeing class action lawsuits coming back, those agents should be very concerned about that for their insureds.
Jon, what makes PHLY a leader in environmental insurance?
We tend to be pretty proactive in reference to things like emerging issues. We also are very accessible, since we have underwriters throughout 6 different offices in the country. We are always in front of our agents with new information, and we're always sharing with them any type of claims trends that come about, as witnessed by them accessing our website, where we have all kinds of claims examples and information on emerging issues.
Where do you see the environmental market headed?
I see us kind of reaching a point where we stabilize a little bit. We've had a lot of new entrants over the last few years that have kept our market somewhat soft. But as the casualty market is hardening, it's going to impact the environmental. So one area we see that's going to have an impact is a lot of the environmental coverages that we offer are optional coverages. They're not required. As property and casualty rates go up, less money attributed to optional coverages, we may see a dip. That dip may impact some of our newer players and possibly harden our market a little bit.
Jon, thank you so much for taking the time to speak with us today.
It's my pleasure.
That was Jon Peeples, Vice President of Environmental for PHLY Insurance. And I'm John Weber for Best Review Magazine.